Hello sir, my name is Rukhsar Ansari and I am pursuing MCom from Fakhruddin Ali Ahmed Government PG College. I am here to give the presentation on the topic inflation accounting. First of all, I will discuss about inflation. Inflation is an increase in the prices of goods and services. The most well-known indicator of inflation is the consumer price index, which measures the percentage change in the price of a basket of goods and services consumed by a household. The problem of inflation, the need of inflation accounting arises now. What is inflation accounting? Inflation accounting is the practice of adjusting financial statements according to price indexes. How does this inflation accounting work? A company that operates in a country that experiences significant price deflation will no longer be able to use historical financial information. Certain companies can use inflation adjusted figures to counter this issue, restating numbers to reflect current economic conditions. Now, types of inflation accounting. Current cost accounting. These methods adjust the value of assets and liabilities for changes in the general price level so that the financial statements are presented in terms of current purchasing power. Constant dollar accounting. This method presents financial statements in terms of the purchasing power of a base year so that the effects of inflation are eliminated. Hyperinflation accounting. This method is used in situations when the rate of inflation is extremely high and the monetary unit is not stable. It involves expressing financial statements in terms of a stable unit of measure such as the US dollar. Now, methods of inflation accounting. The different methods of inflation accounting are current purchasing power. Under this method, money and non-monetary elements are separated to only record not profit and loss. In addition, non-monetary components are updated into figures using a conversion factor equivalent to a specific price index. Second method, current cost accounting. The CCA approach values assets at their fair market value rather than historical cost, the price incurred during the purchase of the fixed assets. Current value method. This method measures and reinstates all assets and liabilities at their current cost structure. Replacement cost accounting method. This method records the replacement cost, which is a parameter under all assets and liabilities in a balance sheet. Now, needs of inflation accounting. The following reasons usually being advanced in its favor. It helps to correct the usually distorted picture of the financial operation and condition of a company presented by the conventional system of accounts. It facilitates intercompany comparisons since inflation hits different forms in different degrees. Correct measurement of income is possible only with inflation accounting. Now, advantages of inflation accounting. The main advantages of inflation accounting are inflation accounting reflects the current balance sheet of a company and not the historical one. It is helpful during general inflation or hyperinflation, as during such cases, it delivers a lot of benefits to its customers. It enables more realistic and comparable statistical analysis of the financial statements of other companies. Profit and loss in inflation accounting reflects the true condition of a company. And now some disadvantages of inflation accounting. The limitations of inflation accounting are as follows. Inflation accounting is a complicated process, making it more difficult to reinstate the figures of the company and present these to the investors. It creates moral hazard issues for businesses that deceive customers with their finances. It leads to many restatements and financial statements that are continuously changing during deflation. The depreciation cost will be low, which does not reflect the actual financial situation of an entity. Thank you. That's all about my presentation.